What's going on, guys? Welcome to the second video in this playlist where my entire goal is to help you shortcut the learning curve of real estate investing. I'm taking what I've done in 10 plus years and hopefully passing it on to you so you could get your next deal as soon as possible. In the next few videos, I'm going to be talking about exit strategies, dispositions, and how to take all of the things that we're going to cover in this video to go and make money. Where I see a lot of people go wrong in this business is that they have a goal, but they don't have a plan. They have a vision, aspiration. They have all these things that they want to go and do, but they don't have the roadmap or the action steps to actually get there. And so what I'm going to be talking about today is what I think most people need to solve, which is the $1 million equation. While I just got done saying every exit strategy, every disposition works, the thing you have to figure out is how do you acquire these types of opportunities? You know, it's always been weird to me being in real estate investing and even investing into a lot of different masterminds and mentorships to find that everybody thinks their strategy is the best, but they don't cover how to find the deals. They might cover the basics, but they don't teach you like the actual strategy. And I've still yet to figure out why that's the case. And so if I could give you just a little bit of clarity on the different types of acquisition strategies, you can make the decision of which one makes the most sense for you. If you have any questions, comments, please feel free to drop them in the comment section. I also do have a real estate investing school, which we could put across the screen right here. This is where I will teach you the basics of real estate investing and acquisitions, and you could, again, go and get the deals. So now I'll pop onto this next screen here. I'm going to try to keep these videos as short and sweet and valuable as possible. So I'll probably be on one of the four corners here while this screen is up. To start off, the two top rows talk to each other, just like how the two bottom rows do, meaning those two strategies go hand in hand. Where most people think you have to go in real estate investing is off markets. You've got to go and find motivated sellers and get them under contract and either wholesale, fix and flip, do a novation, go creative finance, or whatever other strategies out there next. You're being taught to go off markets. While I do want to make sure I try to keep this video as least biased as possible, every strategy in disposition works just like how every disposition mixed with acquisition strategy works too. Every one of these four acquisition strategies can make you a lot of money. Off market, the note I have here for you guys is that it has the highest upside, but it has the highest investments, meaning that you have to put the most amount of money into this strategy to be able to get the most out of it. You can absolutely go off market, direct to seller, free. This is typically in the form of pre-foreclosure, probate, tax delinquency. You could go and find a way somehow to get this data, possibly by joining someone's team, or if the data is accessible for free in your county. How do you go to the extent of getting these deals under contract free is typically door knocking or driving for dollars. The only thing I don't like with that is that sometimes that puts yourself in a little bit of a risky situation, dangerous position, because most of these people are in high distress, high emotion, where their motivation is mixed with lack of good judgment. So the last thing I'd ever want is for anything harmful to happen to you. And I don't say that to scare you away from taking action on this strategy. These are just the free ways of direct to seller off market. What most people do, including spending a lot of money, is going to be pulling lists of data, skip tracing that information, cold calling, texting, emailing, sending mailers, advertising on billboards or TV commercials, or any way possible you could be in front of a seller in distress. This is going to be the most effective way to go off market direct to seller. So the 4 bullet points I'll cover on each one of these is the main things just to keep in mind as you're looking at all of the acquisition approaches, and you could weigh out the pros and cons and what you're willing to invest to figure out which one makes the most sense for you. So starting off with direct to seller, there's a marketing budget that's required. I did mention a minute ago, just to keep things neutral, you could try to do this for free, but more often than not, it's hard to scale unless you're willing to invest. I'm sorry, your favorite guru or online coach or influencer in real estate probably won't tell you that because they're trying to sell you a $10,000 course. And that's not the goal of this call. It's not to call out the strategies or the things that aren't advertised all that publicly. It's to talk about the things that you need to know in order to make the best decision for your future. So direct to seller off market requires a lot of money, but it makes the most amount of money once you have it established. It will also require time commitment. For those of you that work the 9-to-5 job that think you're going to get into real estate investing with the 5 to 9, I want to be clear that if you're spending money on marketing and your phone rings, if you do not answer it, you will miss out on the money and the opportunity that will go to somebody else that is available. So I don't want to discourage you from taking action. I just want to even the playing fields that the only way you could do off-market direct to seller is if you choose one of the free routes where you're most likely in person and you will need to be face-to-face with a seller that will consider selling their house to you today. And that can be done obviously at any time throughout the day. The next piece is systems and processes. A lot of strategies out there, people are going to tell you just build the boat while you're in the water. This is one of those that I don't think is accurate. In order to succeed in direct to seller off-market real estate investing strategies, you need to have a system in place. This is typically in the form of some organization mixed with delegation, mixed with automation, and this is going to be what allows you to catch opportunities in the follow-up process while you're prospecting and spending money on lead generation to keep the business moving forward. So systems and processes are a requirement, as is sales skills. If you are lucky enough to fall into one of these opportunities with a motivated seller, however, of the ways I just mentioned, you got the appointment, you need to be able to close it, which is typically in the form of getting a contract with the seller directly. And if you don't have that capability, you're going to get a lot of objections like, let me talk to my spouse, let me think about it, let me go and shop you around, and they'll tell you that to your face. Those are the kinds of things that are said to a real estate investor when you're in person, face-to-face at an appointment. So what do you do with that information? Hopefully you go into this strategy being willing to spend some money. The starting point is typically $5,000 to $10,000 per month. Just for reference, full picture here, I have people in my market to this day spending $250,000 to $1 million per month. So if you're not willing to invest into this strategy, the strategy may not be willing to reward you. The next one is joint venture. Now, this is how I started to do real estate investing. This is where I learned how to do it. Shout out to Jamil Damji and Josiah Grimes. Couldn't have done most of the stuff I do today without their guidance and foundation. They taught me joint venture investing, which is typically in the form of you have to figure out what value you bring to the relationships. The note on this one is that you're essentially leveraging other people's marketing. So other people could go and find the deals however they do it, and then you are the investor in the transaction. Now, the cool part of this is that there's a lot of deals available today. So this is actually the second fastest way to get a deal done, like now. The hardest part is that you have to build relationships first. You have to have all of your ducks in a row, from buyers to contractors to fix and flippers to sellers, or the people that are direct to seller under contract as wholesalers. You need to be the person that is the middleman. And so at the end of the day, it's a lot of relationship building, and the hardest part is qualification. You need to be able to qualify the people you are working with to verify they are actually who they say they are. And if you can't do that in the form of asking to see their last few transactions, they're lying to you. Okay, this is the downfall to joint ventures. A lot of people watch a couple YouTube videos like this. They end up down a rabbit hole. They download a contract, and suddenly they're contacting homeowners trying to get properties under contract when they have no idea what they're doing. So where do you fit in? You have to know what you're doing. You need to be providing some sort of value to the conversation, the relationship, and the deal, which is typically in the form of you bring the deal to the table, or you bring the money, you bring the construction, or you bring the buyer to the transaction. One of those four ways is how you would do a joint venture successfully. And I do see people do this business model all day, every day. There's a huge opportunity for it. You just need to be willing to be the person that can solve problems fast. Systems and processes are also required in joint venture relationships. Acquisitions, this is going to be something that you need to focus on building. This doesn't need to be done on day one, but a lot of it's going to be built off of follow-ups and staying organized with all of the relationships, meaning you label them out. You have some sort of a tier system or scoring system where you could actually track who is legitimate, who's just in your database, so you don't ever overlap and end up getting unorganized. With that said, this business model is built off of trust. You have to be able to qualify and verify everyone that you are working with, and you have to be able to scale this business by actually leaning into the partnerships and relying on other people to honor what they say they're going to do. Real estate's tough. It's not something you're just going to snap your fingers and have 100% close rates. If you think you are, I'm giving you a reality check right now. Not every deal closes. A lot of transactions that are done, things pop up that are out of your control. Title issues, liens on the property. You might find that your buyer backs out, the seller disappears. This stuff happens all day, every day, not just as a traditional realtor, seeing people buy and sell houses as the agent for the past 10 years. It's always fun as a realtor. You see a buyer buy a new car, or finance furniture for their new house, or change jobs in the middle of a escrow period. And agents think that that's like the craziest thing that goes on. Welcome to real estate investing, where things get crazy. Now, with that said, joint ventures, I think, is a great opportunity to get started. That's what I did. It led me down the path of direct-to-seller marketing, which is where I thought if I spent more money, I would make more money. And that's what wiped out most of my savings. So tread lightly, be careful, verify the people you're working with. And let's talk about the other two strategies. If I get a little more excited or sound more passionate, these are the two strategies that, while I got done saying I'm trying not to be biased, these are the two strategies I specialize in. These two strategies are what saved my career, and these are the two things that I personally believe are the best starting point to real estate investing. Why? Because of the low overhead. So starting off with agent outreach. Agent outreach is the same qualification matter. The only difference, you're not qualifying them, they are qualifying you. Real estate agents are taught to verify buyers to make sure they actually can qualify and that they are who they say they are. So if you don't have all of your contracts ready to go, your buyers, your proof of funds, hard money lenders, title companies, or closing attorneys, preference-wise, you need to have all of that stuff together in order for a real estate agent to take you seriously. With that said, there's a lot of consistency in this business model. Of course, everything across the board, all four of these strategies require it. Discipline, consistency, mindset, blah, 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 right? All the things personal development that everyone's going to talk about. The strategy part of consistency is that if you are not willing to give this a strong 3 to 6 months, it's a very tough business model to establish because most realtors do not have deals or opportunities today. In fact, the statistics show most agents aren't closing deals anymore. So you need to find a real estate agent that is active, proficient in real estate investing, or could just bring an opportunity based on them trusting and verifying, qualifying you. So with that said, systems are easy here. I want to say that as light as I can because I don't want to ever overpromise and underdeliver what I'm saying. The system side can be built in the water. You could build the boat when you're trying to figure out how to swim with this business model. And what I mean by that is that I started off doing agent outreach 6 years ago by using a spreadsheet, a notepad, and a cell phone. I just got done telling you I ran out of money direct to seller. I couldn't afford to spend more on systems and processes, so I started off with what I had accessible and readily available today. And so agent outreach is in the form of reaching out to realtors, text, email, cold call, show up to an open house, find the sign that's on the bus stop, or you're at the grocery store, look down at the cart. Realtors are everywhere. And if you could find a way to get in front of them, they will have opportunities for you, maybe not today, but tomorrow. The cool thing about doing agent outreach is that these are off-market and on-market deals. When you're talking to a realtor, they might even know other wholesalers or investors in the industry, which leads to a potential joint venture partnership down the road. Agent outreach is the biggest strategy that I think has the most potential because it's typically in the form of off-market deals that you don't need to pay for, and the cost of reaching out to a realtor is less than like 0.01 cent per text. If you're an agent listening to this and you're like, Ryan, I get thousands of those text messages and I hate you, I'm sorry. I didn't mean for this to snowball and become what it is today where everybody's spamming realtors. I think what really separates good investors is the qualification. And if I could offer you any advice as like I'm sorry, ask to see their last few deals. It'll eliminate 70 to 80% of those text messages for you. And the 20 to 30% that can actually verify their past few deals, congratulations, I just gave you a free buyer lead. For the investors that are trying to figure out how do I fit into this equation, the joint venture partnerships, having your buyers lined up, or even just being honest and showing some personality is what leads to the best agent relationships and trust. Once trust is established with a realtor, one of my favorite things about these strategies down below is that these two approaches lead to repeat transactions. It's very rare that you'll find someone that is off-market, direct-to-seller, in pre-foreclosure, that is willing to take 50% of their ARV as an offer that they'll accept and then say, what's up, Ryan? You want to do that again? Most of them are in a bad situation and they've got one property and you'll never talk to them again, and then you move on to the next deal. Agent outreach is different. When you end up getting a deal done successfully, you honor your word, the realtor gets paid their commission, their compensation, seller gets the price they were asking, the realtor calls you up and says, hey Ryan, how do we do that again? So agent outreach is repeat transactions. My note on this one is that it is the lowest cost per acquisition. It's one of the lowest marketing acquisition channels out there, and it has extremely high profit margins with repeat business. So agent outreach is built off of trust, building systems as you go, staying consistent in the strategy approach of reaching out to realtor, and then obviously the qualification, having all of your ducks in a row so that you could pass all the tests and quizzes they give to you. And then drum roll on markets. This is my favorite. This is where I have so much fun because this is where you could get the fastest way to get a deal today. This is where a seller has said, hello, marketplace, hello, universe, hello, city, town, state, market, whatever. I want to sell my house today. The MLS is where they go to list it. Now, there's a misconception here. A lot of people think that because it's listed for sale on markets, it's retail value and it's not a deal. No investors want it. It's just not good. The reality is, if I could do this back in 2020, where I was competing against 20 other investors, having to offer above their asking price to get a deal and still make money, betting on appreciation was not a good business model, just for full reference. This is the easiest market to ever do it in. You are realizing more and more that sellers are not getting their retail value asking price, so the days on market are adding up. The price drops are happening faster. Certain keywords, statuses, filters, a bunch of things we compile together is what's starting to be more indicative, whatever the word is, that there's opportunities for us to go get today. And so we created a software, dealsort.com, which highlights and sorts through, analyzes the best deals to tell us which ones are more than likely to take a cash offer today. And so that's what we do. We use the MLS. We have the qualification similar to agent outreach, where we use state-issued contracts. We have our proof of funds. We've got all of the things needed to be able to get our offer accepted legitimately. And the main thing we focus on is speed. Speed is where these deals move fast. If you're not willing to go and get a property under contract on the MLS and know what you're going to do with it today, you probably shouldn't be writing the offer. So we teach you how to make sure you're in the right markets. We want to make sure you have your buyers and everything lined up if you're wholesaling, or your contractors and hard money lenders if you're flipping. And then once you're actually in the game, you have to be willing to move quick. For those that have a 9-to-5 job, this is the best starting point because you could write offers at any time of day. Realtors are used to getting emails, text messages, and being contacted at usually the most inconvenient times. This is where they go on vacation and suddenly everyone wants to buy a house. They sit down at the dinner table, someone wants to see a home. They have a kid's sporting event on the weekend. Unfortunately, there's an offer that just came in. And so we don't try to inconvenience anybody. I just offer reassurance to investors that are getting started here. You can send offers at any time of day to any realtor, and there's typically a response time that they have to honor. So it's actually a more beneficial approach for them too, because they don't need to drop everything and answer your offer. They get to answer within the time frame you give them to respond to it. This one, you do need a couple systems, but typically it's in the form of the MLS or a software that is third-party data to the MLS. This could be a spreadsheet to start and make it way up to the CRM status. This could be dealsort.com. This could be a few different things that all compile MLS data to tell you which is the best one to go after today. And then the most important piece is follow-up. All 4 of these are going to require it, but the MLS is most important because while most of your offers are going to get rejected today, you will find that they say yes or they counter you tomorrow or 10 days or the next few weeks. They will come back around to reconsider. A lot of the offers we get done are actually from agents that have sellers that find a way to have to face reality after seeing a bunch of lower offers come in. Hopefully they like us the most, which is why we also do agent outreach. If it's not this deal, it's the next one. A lot of the things we do on the MLS are with the ideal situation of getting that deal. But if it doesn't work out, we have a realtor that's active in the industry, which is kind of like killing 2 birds with 1 stone. So all 4 of these acquisition strategies work. Are you going to spend some money? Are you going to build some relationships? Are you going to do outreach and stay consistent? Or are you going to write some offers? The last little slide here I have for you guys on this one is that these are the last buttoning up points to this. Direct to seller requires money to get deals. JV, again, is relationships to get the deals. Agent outreach, consistency. MLS, action, or offers. Those are the 4 ways you can do this business. Please do not let anybody on the internet distract you saying that their strategy is the best without you asking how they acquire these types of deals. Hopefully that's one of your big takeaways. If you guys have any questions, let me know. Drop them in the comment section or go to our school, skool.com/real estate investing. I'm always happy to answer some questions for you guys, and I can't wait to see you in the next video. Peace out.